you were setting up the Silver Bullion Trust, you said if you were to take the same amount of capital, which was about $550 million, and put it in the silver space with producers, you would have a hard time finding enough quality companies to buy with that kind of money.
Yeah, and there's no doubt about it. I had a very, very difficult time investing what I wanted to just for our funds, okay? I'm an aggressive buyer. I don't mind buying 20% of a company if I can do it at a decent price. And today, of course, some of the stocks are sold off. And I should also qualify that we don't buy the biggest of the big caps, although at that time I probably owned a pretty good position in silver wheaton. I'm trying to buy things that are a little bit under the radar, and that's why we end up with 20% of certain things. But it's the same today. I mean, if anybody wants to establish a big position in the silver stock, I don't think that would be very easy because the volumes have fallen off dramatically here. And I don't think anyone's really gone there yet. Like, I'm kind of surprised, even when I went around to try to sell our silver fund. I mean, you go to some of the biggest names that even own gold, and you ask them, well, have you looked at silver? They hadn't even looked at it. So I think we're very early days in people moving into silver, both in the sense of owning physical silver and, of course, in the sense of owning silver stocks, which I've certainly postulated will do better than gold stocks going forward here.
Let's talk about the precious metals equities in general, because in the last couple of years, they've underperformed the bullion. And it's been postulated, Eric, that one of the reasons is, investors, because they're nervous about the stock market. I mean, just look at the volatility that we've seen from August of this year to our current trading period. And you don't have to worry about political risk. So how much has the ETFs, both in silver and gold bullion, had an influence on, let's say, keeping investors out of precious metals equities?
I think, Jim, it's very significant, right? The GLD trust became the biggest trust or the ETF became the biggest ETF in the world some months back when gold was $1,900, bigger than the Spider Gold Trust, over $40 billion, I think, at the time. If you tried to put $40 billion in the gold stocks, I can't even imagine what would happen to the prices of those vehicles. When I meet gold and silver companies these days, I am almost shocked by how opportune it is to invest in these companies. And you can sit there, I'm only paying, 3 or 4 or 5 times 2-year out earnings. Well, I would buy something like that at any time in my investment career. But the best part about buying it in a silver or gold stock, I still imagine the price of the products going up, and I'm not building it into that multiple at all. So, for example, when I bought First Majestic the first time, when silver was $20, I said, well, I think I'm buying this at a pretty low multiple, like maybe 3 or 4 times 2-year out earnings. Well, now I see estimates with, of course, the price when the price of silver was 40, that maybe I really only paid 1 times 2-year out earnings. Of course, I was buying it around $3.50 or $4, something like that. But I see these opportunities all the time walking in here where it's some unrecognized name, the guy's going into production, nobody believes he'll produce what he wants, everyone's worried about the silver or gold price. And I just find, one, the values are compelling. The pricing of the physical products is at a low here and probably likely to rebound. And one of the other very interesting aspects of gold and silver stocks, you're going to find it hard to accept this, but they are growth stocks. Most guys who are producing gold and silver, they all have a plan to increase production. And when you increase production, it's not by 5 or 10% typically. If you're a small guy, you can start up another mine, you increase your capacity by 50 or 100%. So you've got pretty interesting growth characteristics in a lot of these junior mining companies that aren't available in the mainstream investment horizon these days. So I think the values are particularly compelling. It's been very unfortunate that gold sold off here, which I have my own thoughts as to what might have happened. I think it was very convenient to central bankers and governments. The price of gold fell off exactly as Europe hit its sort of peak in risk in the financial arena and the sovereign thing. I still shudder at where is the gold coming from. I can just go from 10 to 11 and say, well, the IMF theoretically sold 400 tons last year and theoretically estimated the central banks are going to buy 400 tons. There's an 800-ton difference in a 4,000-ton market. And supply hasn't gone up. How does that work?
What do you think could be the catalyst for the equities, Eric? Do you think it's at a point where either the financial markets, the risk in the banking system, sovereign risk increases to the point where even the guy on the street says, you know what, like as you mentioned earlier, I don't want my money in a bank. And the other thing that I think is a policy that I have been just blown away by, our government is pursuing a policy of financial repression where they inflate and keep the interest rates artificially low. So the interest rate on a 10-year Treasury note is probably 1.5% below the stated CPI. And when I say stated CPI, I think that number is artificially low. And yet, investors are flocking to fixed income instruments where there's risk, not only inflation risk, but there's also sovereign risk and financial risk with some of the financial institutions.
I mean, I just can't believe that people would buy bonds. Maybe everyone's trying to game the Feds or the ECB or whatever, which is a very short-term game. But there's essentially, as you're pointing out, Jim, there's no return on owning a bond. So why the hell would you own it? We've had this great wealth redistribution going on for the last 10 years where people who are invested in precious metals have had a phenomenal return. If you take it over the time period, stocks are up something like 1,400%, this gold stocks, and the stock market's done nothing. And I think that wealth redistribution is going to carry on here. When does it happen in the stocks? I think when the prices show that they've had their correction, they're going to start moving back up again. I think it'll be very, very swift, that the move in the gold and precious metal stocks. I think we should have broken out when the UE went through whatever it was, 607, about 6 odd weeks ago, and then all of a sudden, gold gets bombed for some mysterious reason. And I suspect that my own view is that I cannot explain an 800-ton difference in a 4,000-ton market. There's only one way I can explain it. Central bank selling gold surreptitiously, because I don't know where the gold's coming from.
One thing that I think we'll eventually see, and then a mutual acquaintance, Bill Murphy, has said, you've got to be in it to win it. And what would you say to investors that see the volatility not only in bullion prices but stock prices? Would you say just, buy when they're cheap, hold on, and just remember, I always tell investors, Eric, just look at a 10-year chart of gold, silver, the HUI. Yeah, there's been 20, 15% corrections, but, look at the general trend of where it's going. Well,
I agree. I mean, as a guy who's been invested for the last 10 and a half years, I mean, we have some horrendous sell downs in the metals and the stocks. But, sooner or later they catch a bid. The earnings that these companies are going to make are going to be phenomenal. I'm sort of looking forward to the third quarters coming out here, and maybe even some of those guys will start paying dividends, or maybe we'll see some acquisitions. But the relative value of gold stocks versus others, I think, will become more and more apparent all the time. So all good investing is not something where you're taking a 3-month outlook. You got to look. Even when I'm buying stocks, as I said, I look 2 years down the line. What's this thing going to be like 2 years down the line? And I realize I can go through a lot of volatility and tough times waiting to get there, but I know damn well when I get there, the stock's going to be substantially higher than where I buy it. So it's just a matter of hanging in and taking the lumps, and we always have forces at work against us. I think that's commonly accepted, maybe not commonly, but those of us in the business accept it. And there's not much we can do about it, because when the guys decide to fire into the paper market, I mean, the amounts are stunning. The dollars, I mean, when 1 billion ounces of silver trades, that was $50 billion in a day of sellers of silver. It's just staggering. And we don't have that kind of firepower on a daily basis to keep prices going up. So. Well, you mentioned something, and this is something I would like to leave our investors as we conclude our conversation, is it's very hard to look at stocks in general today, and especially with a slowing U.S. economy and a slowing global economy, but you can look at stocks like a Silver Wheaton, where in the next 2 or 3 years, they're going to double their production. I don't know, Eric, of any large cap company that I follow. I don't care if you're looking at Apple and Google, that are going to say, we're going to double our sales in the next 2 or 3 years, and yet that's exactly what some of these producers are going to do. And that's the shocking part. I mean, It's funny to describe gold and silver companies as growth companies, but they are growth companies, and they can get growth from two areas. One, produce more product, and two, let's watch the price go up. It's a pretty compelling investment opportunity.
Well, listen, Eric, as always, I want to thank you for joining us on the program. If our listeners would like to find out more about what Eric and his group does, you can go to Sprott.com and find out about Sprott Asset Management. That's Sprott.com. We've been speaking with the head of Sprott, Eric Sprott. Eric, thanks for joining us on the program.
All the best, and thank you, and I hope your listeners are increasing their wealth by listening to your good advice.
All right, take care.
All the best.
You can subscribe to Financial Sense NewsHour in the iTunes and BlackBerry podcast libraries or at feeds.feedburner.com/FSN. Find more information about our guests at www.financialsense.com/newshour. Friend us at www.facebook.com/financialsenseonline. For our on-the-go listeners, you can access Financial Sense on your mobile device at m.financialsense.com. The Financial Sense NewsHour is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the NewsHour each involve their own unique risk factors, which are not discussed on the show. Responses to listener inquiries are based on the personal opinions of James Poplava and do not take into account listeners' suitability, objectives, or risk tolerance. Financial Sense NewsHour and its parent company shall not be liable for any financial losses that result from investing in any companies profiled on or advertising with Financial Sense, or arising out of the use of any material on the NewsHour. Be advised that you invest at your own risk.